Most people think profits and losses are opposites. One represents success, the other represents failure. In trading, that belief creates confusion from the very beginning. Because profits and losses are not enemies, they are components of the same system. The real problem starts when traders expect profits to be smooth and losses to be rare. Welcome to the phantom trader world, where clarity comes before execution. Markets do not behave that way. Trading outcomes are uneven by nature. Wins and losses are distributed over time, not arranged for comfort or emotional balance. And this is where many traders get trapped, not because they are incompetent, but because their expectations are built on the wrong picture. They imagine profits as proof, and losses as a mistake. So every red day feels like something went wrong, even when nothing went wrong at all. This is why early profits can be dangerous. They create a false sense of understanding. A trader makes a few good moves, gets positive results, and silently concludes that they now know what they are doing. But early profit often says more about conditions than skill. Sometimes the market simply allowed it. Then a losing period appears, not as punishment, not as a personal message, just as part of variance. And because the trader did not expect it, they do not treat it as normal, they treat it as a threat. That is the first turning point, not the loss itself, but the meaning attached to it. Professional traders think differently about results. They do not judge performance by one trade. They do not judge it by one day. They judge it by behavior over a series of outcomes. They focus on the relationship between risk and reward, not the emotion of the last result, because a single outcome is not information. It is noise. The signal only appears over a sequence. This is also why losses are not interruptions. They are operating costs, just like inventory in a business or training expenses in a profession. You do not call a business broken because it had costs this month. You evaluate whether the costs are controlled and whether the model produces value over time. Trading works the same way. The danger appears when traders personalize outcomes. A loss becomes a verdict on intelligence. A win becomes proof of identity. That emotional attachment distorts decision-making. Instead of asking, "Did I follow my process?" the trader asks, "Why did this happen to me?" And that subtle shift is expensive, because trading is not about being treated fairly. It is about operating uncertainty with structure. Another common misunderstanding is the idea of constant profitability. Many people imagine progress as a straight line, up and to the right, but there is no straight line in trading. Equity curves rise, pull back, stall, and rise again. There are phases where the system performs well, and phases where it struggles. That does not mean the system is useless. It means the system is interacting with changing conditions. Short-term thinking turns these phases into panic. Traders increase size to recover faster. They force setups that are not there. They abandon rules that were working, because they want relief, not consistency. Not because the system stopped working, but because patience ran out. Professional traders plan for variance. They expect clusters of losses. They expect uncomfortable sequences. They prepare mentally and financially for them. This preparation protects decision quality, because when losses are expected, they lose their emotional power. The truth about profits and losses is not that one is good and the other is bad. The truth is that both must exist for probability to express itself. Trading is not about avoiding losses. It is about controlling their impact, so profitable behavior can emerge over time. Profits reward discipline. Losses test it, and long-term survival depends on how both are handled within the same system. Understanding profits and losses is not about predicting outcomes. It is about staying consistent, long enough for probability to work in your favor. If this video added clarity to how you see trading, support this work. An interaction tells the algorithm this foundation matters. A subscription tells me to keep building it with you.